Stocks see a broad-based decline thereafter recovery from the lows on account of fading optimism in AI. Realty and metals are big losers, even as financials hold steady and continue to rise.
The end of earnings sparks a block deal rush with 5 such transactions mopping up around 8,800 crores. Emphasis Paytm, ITC, Emcure Pharma and Zinka Logistics see pairing of stakes.
Stock of PhysicsWallah lists at a hefty premium of 33% to its IPO price. The bootstrapped startup focused on offering affordable education boasts over 300 centers, hopes to grow at a 30% clip and turn profitable in the next 12 months.
The stock of Grow owner Billion Brains Garage Ventures scales to 85% above its offer price in what some see as a rationality-defying bull run. CNBC-TV18 studies key metrics of India's #1 brokerage by customers for answers. Hello and welcome to a halftime report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Mangalam Malu. Well, it's turning out to be a session where we are seeing some amount of red on the screen. This is after 6 consecutive days of gains for the markets. So some amount of profit booking is not something that, is completely surprising at this point in time. We do have, the indices such as the Nifty Bank, the mid-caps, which really scaled to record highs. So maybe some amount of profits being taken off the table, par for course.
Yep, par for course. But the interesting part is, 6 days of a rally has led to this buy on dip sort of sentiment that has played by. And which is why from the lows today, the Nifty has actually recovered almost 100 points. So, where it goes as it moves towards that 26,000 mark will be extremely crucial to track, given that it's options expiry, weekly options expiry that plays out in the afternoon as well. But suffice to say that there has been a strong amount of recovery from the low. So as soon as the Nifty moves towards that 25,850, 25,800 sort of mark, we've seen recovery. And this one understandably has been led by the Nifty Bank, which continues to hold around that 59,000 mark after hitting a fresh record high in yesterday's trading session. Some further purchase on that. And some non-banking names as well, which are doing extremely well from the frontline end. We have Bharti Airtel, which is among the top Nifty gainers. Asian Paints, ever since its numbers and ever since Rakshit Hargave's exit from Birla Opus, that stock's up 16%. So a big move is what we're seeing on that counter. And a couple of these financials, non-banking financials doing well too. HDB Financial for one and Shriram Finance stand out as gainers. But a lot of the movers and shakers that we're tracking today, one of them definitely is GMR Airports. Vivek joins in first up. Vivek.
Well, that's right. So GMR Airports, remember, came out with a very strong set of numbers. The higher tariff that the company has received in terms of dial the Delhi airport is something that has aided the operational performance. And today, very interesting report from Jefferies actually has gone ahead and further aided the up move. So Jefferies, has gone ahead and raised the target price to 115 rupees a share from their earlier 108 rupees. They've raised their EBITDA estimates by 3 to 7% as they believe that the outlook for the company's earnings profile is improving. What they're saying is that GMR presents a unique blend to play utility as well as it is a consumption business model. The standout EBITDA beat in Q2 was despite soft traffic, and they believe Q2 was largely driven by newer tariffs, strong non-aero growth, as well as scaling of the adjacent businesses. Traffic dipped due to Delhi upgrades as well as airline capacity cuts, but they believe H2, there will be a significant rebound as far as traffic growth is concerned. Along with that, they believe yields benefited from tailwinds both in the retail as well as in the duty-free segment. The blended aero yield per passenger actually grew 69% on a year-on-year basis, and the non-aero yield per passenger grew 17% on a year-on-year basis. The company actually has gone ahead and given a formal guidance that targeting minimum non-aero revenue growth at 14 to 15% year-on-year. And on the back of that today, one of the top gainers, that is GMR Airports.
Yes, absolutely buzzing around in today's trading session, up around close to 5% odd. But hold on, Vivek, Emcure Pharma is the other stock that you're tracking on the back of a large block deal that's taken place.
That's right. So earlier, just at market open, you saw close to 500 crores worth of equity change hands as far as Emcure Pharma is concerned. Last evening, we managed to get access to the term sheet. So BC Investments, an affiliate of Bain Capital, remember they held a little over 6% stake in the company at the end of Q2. They went ahead and trimmed close to 2%. And the floor price for this particular deal was at a steep 7% discount. So now the interesting part is for further sale of shares, there's a 3-month hold-up or almost a 90 days of lock-in. But on the back of that, Emcure under a bit of pressure. This is due to the large equity supply that it saw in the trade today.
All right, Vivek, thanks a lot for that. That's about MKR Pharma. Upasna joins in with more on Keynes Tech. Upasna, the numbers weren't particularly bad, neither was the commentary, but the stock is sharply lower today.
Well, certainly, Mangalam, as rightly pointed out by you, the numbers were good and even the commentary. But mind you that today marks as the day as the QIP lock-in has been released. Now, according to Nuvama Alternate Research, as many as 12 million shares have been freed up for trade, which were under lock-in for 1.5 years or even more, which is why we can see the sharp fall. Now, coming to the management commentary, it remains quite upbeat. Here are some of the important takeaways. Now, management sees 1,000 crore revenue from its OSAT business in FY27 is what they have highlighted today, and 60% of the OSAT capacity is tied up with clients is what they have emphasized on. Coming to the OSAT business margins, it will be significantly higher than the existing business margin is what the management has indicated. And mind you, in terms of EMS players, Keynes Tech enjoys the highest margins amongst its listed peers. Now, it expects PCB facility to be ready by the end of this financial year. And in terms of margin improvement, it believes that it will sustain going forward as well. And it has given a EBITDA margin guidance of 16% for FY26. So certainly the management is sticking to their FY26 guidance in terms of margin, and overall commentary remains upbeat.
Okay, all right. Keynes Technology, that stock down around 4.8% at this point in time. I just want to point out that overall for the bank Nifty is just about holding its head above the water, up around 15 to 16 odd points. But separately, we have the Nifty, which is down around 47 odd points at this point. The advanced decline ratio also nothing to write home about. So just about 1,560 stocks advancing to over 2,600 stocks declining. So there's a huge gap which is taking place in the advanced decline ratio this afternoon. But let's go across to Vivek. He's here to tell us about all the stocks that are moving around in trade today. Vivek.
Well, thank you so much for that. You know, we discussed three important ones, stocks that are moving around. And like you mentioned, in the broader end of the market, the advanced decline ratio quite skewed in favor of the declines. But some of the individual stocks that we're tracking today, Hindalco, you know, have a look at this particular NBFC. Among the top F&O gainers today, almost 2.5% higher. Cooled off a little bit. The other stock on the radar is PNB Housing, a ratings upgrade coming in for this particular name. Brokerage is quite bullish. That particular stock doing quite well as well. And a recent listing, that is PhysicsWallah, a very strong debut. After a while, we're seeing a company list at over almost a 30% premium. So PhysicsWallah, the other stock on our radar today, 37% higher for this particular name. Well, 5 large block deals that happened in the session today. Most of them reacting, with a negative bias. Emphasis, has recovered from the day's lowest point. But remember, it's been an underperformer going into this particular block deal. ITC saw large trade. Paytm almost a little over 2% equity. MKR Pharma we just discussed, and also Blackbuck, also known as Zinka Logistics. All of these names actually saw block deals take place in the session today. On the other hand, have a look at Keynes as well, one of the top NSE 500 laggards. And Avas Financial, after a while, this particular stock on higher volumes is slipping significantly, the top mid-cap laggard in the session today.
All right, take that point. Thanks a lot for that, Vivek. With that, we'll slip into a short break. On the other side, we'll focus on Max Healthcare in our Insight Edge segment. The management spoke to us. Ekta tells us what she made of it. Welcome back. The Nifty continues to hold at the cut of almost 50 points, but a fair amount of recovery from the lows is what we've seen. The Nifty Bank at around that 59,000 mark as well. One of the stocks on our radar is Max Healthcare, and here's why. Because the company reported a good set of numbers, and we spoke with the management as well. So what were the insights that we got? Here's our special segment, Insight Edge. Ekta.
Well, yes, the numbers did come out a few days ago, but they did hold their calls. So there was a lot of takeaways which came in from the conference call, as well as what they have told investors. So a couple of brokerage notes, and then I'll get to what the management said. So UBS has written on Max Health. They have a buy and a target price of 15.50. According to them, the brownfield capacity addition will be driving growth and earnings. The management indicated that the issues related to cashless service for insurance patients has been resolved. Jefferies has a buy and a target price of 1400. According to them, the CGHS rate revision adds 5% to the FY 27-28 EBITDA, and new beds will be operationalized in phases, thereby limiting the negative impact on margins. Now, we did speak to the management earlier, and they had a couple of important takeaways. They said that they haven't had as many seasonal patients this year. There was an early Diwali as well, which probably impacted numbers to a certain extent. The CGHS revenue should be around 200 crores. So they should get an addition of around 200 crores. Remember that there are multiple procedures, around 2,000 procedures, where the rate has been revised to as much as 25 to 30% for some, and that came into effect in October. So that is going to help companies such as Max, which gets 10% of their revenue from CGHS. 80 to 90% of the CGHS incremental revenue should now flow into their EBITDA. They've also mentioned that they revise healthcare prices on an annualized basis. Medical inflation is currently at around 2 to 3% according to ABSOI, and the revision in hospital rates would be around 2 to 3% as it has been historically. They have indicated that they've pretty much, ironed out the issues with the insurers. And when it was, when there were issues with cashless payments, the patients actually just started paying in cash as compared to going for cashless payments. But let's listen into the management. They spoke to us earlier this morning.
CGHS should give us, when it comes through entirely, because certain race, categories of super speciality have yet to be sort of streamlined in the government's portal. But once it comes through, and we are expecting it, the process to be completed any day, this should give us a fillip of over 200 crores towards the top line, and almost entirely all of it should flow to EBITDA as well. You don't revise prices of healthcare on a monthly basis. You typically do it on an annual basis, unless there's been a huge sort of increase in minimum wages or some sort of cost impact, which is sudden, that you would do it perhaps mid-year. But typically, and that would be 30th of September. Otherwise, you would wait for the end of the year. It would be the same as it has historically been, which is 2 to 3%.
All right, speaking about healthcare, just watch out for a couple of these life insurance names. SBI Life, for one, has moved to the high point of trade. In fact, it's crossed that 2,000 mark. 2,000 psychologically important from an SBI Life standpoint, largely because, it's been flitting around this mark for the last few trading sessions. So currently recovered off lows. This morning, there was a brokerage note that came in from HSBC as well. They've upped their target on SBI Life from their current level. So the stock holding well above that 2,000 mark. Let's see where it goes from here on. Historically seen a little bit of a resistance around that 2,000, but now that it's broken out, let's see how that goes. And backed by a brokerage note itself. Speaking about brokerage notes, we do have Morgan Stanley, which in its recent note said that 2026 is likely to be a macro trade in stocks. Most risks have come from outside India. Sudarshan joins in with more. Sudarshan, what's Morgan Stanley saying?
So there is an interesting note from Ridham Desai of Morgan Stanley, and he believes that going forward, or say government's policy action is basically strengthening the long-term story of India. And if there is any risk that we might see, it will come from outside, and 2026 is expected to be a macro trade in the stocks. Now, what will be the Sensex target? So as per Ridham Desai, 2026 and Sensex target base case is 95,000, and there is a probability of 50% in that, which implies an upside of almost 12% from current levels. In the bull case, which has the probability of 30%, target is almost 107,000, implying an upside up to 26%. And in the bear case, which has the probability of 20%, target is 76,000, and that implies downside of 10% from current levels. Now, if you talk about the sectors, preferred sector, first one is consumer discretionary. He says urban demand recovery will aid the consumption, and the recently announcement that government has made of GST cut, it augurs well for the sector. Second one is industrials, and the reason he is positive on backed by robust government capex and pickup in the private capex. Third one is financials, where deregulation, if government takes, it would be positive for banks. Neutral on consumer staples. Fundamentals should improve as rural growth in the last few months has seen a major improvement. On technology, AI debate is hurting multiples, but he believes that it's not going to impact earnings in the foreseeable future. Amongst least preferred sector, first one is utilities. He's underweight given lack of cyclicality in the energy because he prefers domestic cyclicals over global cyclicals, healthcare because he's avoiding defense sectors, and materials because he's taking cyclical exposure via industrial. So we'll have to see over the next 1 year, it's 76,000 for Sensex or 1,07,000.
Okay, all right. Thanks very much for that, Sudarshan. So interesting note coming in there. We'll take a break on that note, but on the other side, full tilt on the markets continues. We have Sachitana Notikar joining in to give us a couple of his trading calls. Welcome back. Well, let's get talking about the F&O space. We have Manglam who's joining in to give us more details on what he's tracking in terms of the F&O statistics this afternoon. He's at the F&O desk. Manglam, over to you.
Well, if you look at the Nifty, it's been fairly range-bound, but it's recovered from the lows, and that's a heartening fact. So 25,950 thereabouts is where we are, and it's been led by outperformance that we've seen for the Nifty Bank. The Nifty Bank hit a record high yesterday. The mid-cap index is seeing some bit of profit booking after hitting a record high yesterday. The good part is that the Nifty has continued to, recover from the lows, even as we're facing supply a little around that 26,000 mark, a little upwards of that as well. But if you look at the last 5 or 6 trading sessions, the lows on the Nifty come up for you on the screen. And, today's low of 25,877, extremely crucial. Yesterday's low of 25,906 tells you that the lows have been, gradually moving higher for the frontline index. Ahead of the weekly options expiry, the India VIX 2 is fairly contained. At one point, it was up around 4-5%. Now it's come off a little bit, even as the markets recovered from the lows, telling you that maybe the street believes that this range continues as well. And the range has moved higher. How do I say, why do I say that, and how do I decipher that? A couple of things. One is an hour ago, we had the 26,000 call and the 25,800 put fairly active. Right now, the put writing has moved higher to 25,900, even as the 26,000 calls have been seeing a fair amount of writing. The second part, towards the options expiry day, we see a lot of straddle writers, a call and a put together. About an hour ago, the most active was 25,950 call and 25,850 call and 25,850 put. But now it's the 25,950 call and the 25,950 put, both of them extremely active, telling you that the option writers are hoping for support around 25,870 and some resistance around 26,030, 26,040 thereabouts. Today's low extremely crucial. Below that is the 20-day moving average of the Nifty. Fresh shorts are seen on a couple of these stocks like Ireda and 197 Communications. Remember, that's Paytm. Saw a large trade in the morning as well. But suddenly, we've seen a lot of spurt in long positions in PG Electroplast. That stock's moved to the high point of trade with a lot of OI backing it. So that's telling you that, it's fairly well speculated in the F&O space right now on the long side.
Okay, all right, Manglam, thanks very much for that. Sachitanan Utikar joins in to discuss the technicals now. Sachitanan, thanks very much for joining in. Well, it is a market where we're seeing some amount of red on the screen, but this is after 6 days of gains on the trot for the markets. So how would you approach today's Nifty dip? Would it be a buy?
Good afternoon, Ekta. Good afternoon, Manglam. I think going by the trend, clearly we have seen that for 7 consecutive trading sessions, Nifty has maintained a positive close. And if you look at the data closely, it has managed to, recover above and close above its 5-day exponential moving average support. Now, this particular support for the day is placed somewhere close to around 25,900 even for today's session. And the way the ADX has been turning up, it is about to break above that 25 level. So overall, the structure has been very healthy. It's a classic buy on decline sequence which is ongoing. We expect this particular progress to continue, and we are anticipating that eventually the Nifty could scale towards 26,330. But at least for the day, 26,050 looks like a very significant, resistance. So we are not expecting a closing above this particular level, at least from today's trading session. But on the lower side, it has been finding meaningful support somewhere close to around 25,900. So in case if we see a decline, I think that decline could be again healthy. We continue with our stance of, deploying long positions. One can keep a stop loss at 25,840 on closing basis. and build significant aggressive long positions once we see a breakout above that 26,050 mark. Eventually, we see the Nifty scaling towards 26,330.
Okay, 26,330. That's where you see the Nifty eventually scaling. Specific stocks, both frontline as well as broader market?
From the front line, we are liking TCS now. Now, if you look at the last couple of weeks, we have already seen a very steady, silent up move developing in this particular counter. It has started trending above its 50-day exponential moving average support, which is placed somewhere close to around 3,060. But if you look at the daily scale, it looks like a classic rising three formation. The overall, sequence looks very affirmative. We may see this particular stock scaling towards 3200, 3250 kind of level, and hence we have recommended this to our clients as well. One can keep a stop loss at 3065 on closing basis and build long positions in TCS futures for a positional target of around 3250. The other stock which has hit our radar is Masuka Dock. Now, if you look at the overall performance of the stock in the last few trading sessions, we've already seen a V-shaped recovery. We saw a very strong base building formation somewhere close to around 2650. A piercing line candlestick formation was established there. It reconfirmed the base, and now the stock is trending near its 50-day exponential moving average, which is placed around 2800. So eventually, we see this rally getting extended towards 3010 levels, which is the V pattern target zone. But from a trading perspective, one can expect an immediate swing towards 2885, and hence we are recommending building long positions with a stop loss at 2776 on closing basis.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and speaking with us, giving us all of your strategies. We'll take a short break. But up next, commodities. Manisha Gupta will join in. She has with her Colin Shah, the MD of Kama Jewelry.
Welcome back. Joining us on the show now is Colin Shah, is MD at Kama Jewelry. Colin, hi. Thank you so much for joining in. First of all, your sense on the prices itself, because they continue to be very volatile. Looks like gold is going to break $4,000 an ounce anytime from now. How would you look at the very high volatility in gold prices? And how are you reading all of those global reports, which still suggest that 4,500, 4,800, 5,000 by next year end is a possibility?
Thanks, Manisha. So gold has been volatile, will continue to be volatile. This global uncertainty that we've been seeing continues over the last, 3 quarters now since Liberation Day, as Trump calls it. So I guess we are not seeing any pause, I would say, in tariffs, in the Russia-Ukraine war, in what's happening in Israel. So with everything being the way it is, gold is the safest haven and looks like it's on its way to $5,000 for sure. Maybe it's in the next 12 months, 15 months, but it's on this northwards journey. So that does make trade extremely volatile. Retail in India has become challenging, especially in terms of volume. Volumes we saw were significantly down Diwali time, though retailers made it up on the value side, but the consumer is holding back on the number of grams they're wanting to buy. At the same time, we are obviously seeing a large part of everyone's portfolio moving into ETFs, digital gold. So gold continues to be, in a strong place.
Colin, how are you looking at the kind of import data that we have seen for the month of September and now October as well? As compared to last year, same month, we've seen imports kind of really jump up, whether it has been about gold or silver clearly continues to be a very, very strong contender there.
See, over here, I guess there will be monthly anomalies. So, that continues to happen, where we see one weak month and one strong month. But overall, if you look at the year, I think the entire financial year, we'll probably be seeing tonnages more or less where it was last year. but a greater chunk going into investment. So jewelry as volumes is coming down 10-15%. The value, because it went up 35-40%. So everyone's making up, their value turnovers, whatever they were doing. But there is a greater chunk now going into bars, coins, bullion, directly into savings.
It is. Colin, how are you also looking at the studding part of it? I mean, as you said, jewelry in numbers, in sense of value, perhaps would be the same volume, as you said, 10-15% of a decline there. But within this as well, is it going to be about budgeted? Is it about light? Do you see bridal numbers continue to be as strong?
Bridal will be strong because now in the next 6 months, obviously, is the wedding season. So, every year we do see December to March being quite a spike. The consumer was expecting, I think, some amount of correction post Diwali, which did not happen. So there was some kind of, holding on to their purchases, hoping that the pricing would correct and they'll get a deal closer to the wedding. But that's really not happening. So I guess we'll see a spike in sales from December to March period going into season. But having said that, volumes are subdued. Values will be made up.
How are you also looking at the exports number? Because that also continues to do well with the kind of other markets opening up and the rerouting that we've seen happening for US as well. What really seems to be doing well within that segment?
US continues to be strong. The consumer, in spite of inflation and everything that we're seeing, I guess the sales at the retail counter, even as of last weekend, haven't been very weak. Let's put it that way. The industry was expecting a little softer Christmas, but in the run up to Christmas, it seems like numbers will be more or less what they were last year. So it seems that tariffs have had its effect on supply chain and how the jewelry gets to the US and the counter, and everyone's had to jump through hoops, just to make, I guess, this whole thing happen. But at the end of it, consumption still is strong. Lab grown is in a good place. Natural also, after, I guess, the volume drop that we've seen over the last 2-3 years, seems to be steady this year. And actually, in the larger stones, especially 2 to 5 carats, there's also been a little, upside on the pricing. And even in the very small goods, we are seeing strengthening or a little, going up, especially after Diwali, as manufacturing in Surat is down. So natural also seems to be in a good place. Lab grown is okay. And the jewelry business overall, especially on the US side, is quite strong. Coming to the brands, interestingly, they've had a very strong last quarter. The Richmond Group, LVMH, all the larger companies. So it seems like the luxury space and, the rich are getting richer, like and there's no, I guess, dearth of money at that very, very top end of the market. So if you see large stones, large emeralds, large rubies, all kinds of luxury, whether it's, I would say, any country in the world, that continues to be extremely strong, actually.
Wow. Okay.
Okay, all right. The rich seem to be getting richer. Thanks very much, Colin, for taking us through that conversation, and Manisha as well. Well, the other example of the rich getting richer definitely is in the stock, in the Physics Wala listing today. So 38% increase is what we've seen in terms of the price post-listing. So Physics Wala, as you can see, has just zoomed ahead in today's trading session, and taking it with it is Grow, which is up around 8.5% at the high point of the day, already picked up around 27% this week. We'll do one thing. In fact, we'll stick with the story. We'll take a break, but on the other side, we'll focus on these recent listings, Physics Wala and WeWork. More details on both of these coming up. Welcome back. Well, for the markets, it's a bit sluggish. So we have the Nifty, which is down around 70 odd points. But one which is really defying gravity is Physics Wala. That stock is up around 38% at this point in time. And if you look at it, it was subscribed quite modestly. So it was only 1.9 times in terms of a total subscription, but it's really taken the market by storm in today's trade. But to give us more details about this particular education company, Upasana is here with the listing details and the takeaways that we had with the management earlier today as well.
Well, overall, it's been certainly a strong listing. The company has listed at a 33% premium, surpassing the market expectations. It listed at 145 per share versus the issue price of 109 per share. Now, company is a leading edtech player specializing in test preparation for major competitive exams like IIT-G, NET, and various others. Now, looking at the industry outlook, it remains quite robust, is what the brokerages have also highlighted. The Indian education market is a dominant global sector, and it's projected to expand nearly at a CAGR of 10% going forward for the next 5 to 7 years. Now, management joined us post-listing, and here are some of the important takeaways highlighted by them. Now, company aims to bring access to good education to under-penetrated areas in India. It has guided it will turn profitable in less than 12 months from now. Now, coming to the revenue mix, it has guided that it will remain skewed towards the online business, the contribution of which is nearly about 52% as of now. Company has also given a revenue growth guidance of 30% for the next few years. Now, coming to attrition, which is one of the key concerns the management has highlighted, it will certainly see a decline in FY26. And overall, coming to the inorganic expansion, the company is not planning for anything as of now, is what they have indicated. So overall, management commentary remains quite upbeat and a strong debut.
A strong debut indeed, Upasana. Thanks a lot for that. In fact, earlier today we spoke with the management. Prateek Maheshwari, who's the co-founder and whole-time director of Physicswala, joined us, and this is what he had to say.
We are on a mission, and that mission is more important. That access is more important. There will be quarters and quarters in our life, but the year in the student's life doesn't come back. This is an irreversible year for my students. So so continue to make impact in the student's life, as well as we will be utmost responsible to create our shareholder value as well. So the path to PAT level profitability will achieved in less than 12 months from now. We will continue to grow more than 30% in upcoming years. We continuously monitor teacher rating given by the students, their engagement levels, the students' performance, and the outcomes. So we had to let go a bunch of teachers which were not able to perform in their classrooms, and what is more important is the student outcomes is the North Star metric for the company. At the same time, we have designed a faculty training program where where 3 to 6 months there is an intense training program crafted by Alag is actually solving this problem completely. But you will see a sharp dip in this number this year. Lot of headroom to expand in domestic market, and no as such big plans for inorganic expansion.
All right, no big plans for inorganic expansion. Profitability is less than 12 months away, and good growth is what they are foreseeing over the next sustainable years, over 30%. But another stock, recent listing, which is doing extremely well today, is WeWork. In less than a month from listing, we've gotten a note coming in from Jefferies, a bullish note. Sonal joins in with more details on that one. Sonal.
Well, yes, the stock is buzzing in trade, but do remember it is still below its listing price. The stock is on our radar because Jefferies has initiated coverage on the stock with a buy rating, and the target price is 790 rupees a share. Now, do remember it is India's largest flexible workspace solutions provider, which is by revenues in the country and in the listed space as well, of course. At 17% CAGR, Jefferies says flexible workspace stock is growing at 2 times the pace of the office stock. So basically, co-working space sector in general is growing faster than the commercial space, and the total revenue CAGR of 22% for this company over the last 2 financial years was driven by a combination of 2 things. First, they could increase the rentals, that's the average rental per unit, and also because of demand for flex office space grew considerably, which contributed around 66% of the total growth. The operating leverage led to adjusted EBITDA to grow as well from 14.4% to 19.2%, which came by in FY25. and they expect this trend to continue as well. So basis IGAP accounting, they expect the revenue CAGR to be around 22% and EBITDA CAGR to come in at 28% for the next 3 fiscal years. And also the capex cost, which is coming currently per desk, is at 1,35,000. This implies that going forward, the capex could be around 250 to 300 crore rupees in terms of expansion. Do they have that cash? They have been continuously improving that number. They already saw cash flow generation of 300 crore rupees in the last 3 fiscal. They've been able to reduce debt with the IPO proceeds. And Jefferies believes this is a trend which would continue going forward as well.
Okay, all right. Thanks very much for that, Sonal. Well, we'll take a short break, but here is some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at just your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or just scan the QR code on your screen.
Welcome back. High flying is the GMR Airport stock. It's up 5% right now, a big mover in today's trading session. In fact, this year itself, it's moved around 30% after a big move that we saw in the previous year. So that's about GMR Airports. But guess what's flown faster and higher than GMR Airports? The Grow owner's share, which is Billion Brains Garage Ventures. It's 85% above its offer price. In what seems like a rationality-defying bull run, the shares of Grow have nearly doubled since listing in just the last few days. Hormaz joins in.
Well, if you are a cricket fan, you'd remember the late Dean Jones's very famous remark every time someone hit a huge six: going, going, gone. However, this latest listing on Dalal Street has been growing some more, at least in terms of stock price. Now, it has been 5 days since Grow listed, and the stock has nearly doubled from its IPO price of $100. But how does the latest Dalal Street entrant stack up when it compared to peers and unlisted ones as well? Now, on the revenue front, Grow's top line is lower than peers like Angel One and Zerodha. Now, active clients for Grow are the highest for any platform, and therefore it stacks well above the other two names. But its average revenue per user is less than half of Angel One and even well below Zerodha, whose ARPU is well above 10,000 rupees, as you can see on your screens. But can Grow play catch up with its peers going forward? Now, the management expects its top line to grow 25 to 30% and costs to grow by 15 to 20% over the next few years. Now, basis that, if we take a 5-year projection, Grow's revenues could go up to 14,500 crore rupees by FY30. Its margins could grow from 63% to 80%, and its profits could touch levels of 8,500 crore rupees. Now, this is an FY30 projection, assuming Grow continues to grow at the pace that the management has guided for. Now, when we take a look at the PEG ratio, or the price to earnings growth ratio, that comes up to around 1.63. Now, this is basis a 37% profit CAGR and based on its FY25 EPS of around 3 rupees. Now, while Grow may be lagging its peers currently on certain aspects, it has surpassed them all when it comes to its value. Now, at the highest point of the day today, Grow was valued at well over 1.1 lakh crore rupees, which is the sum total of the other three put together here: Angel One, Motilal Oswal and Nuvama Wealth. Now, the management spoke to us earlier, and they also mentioned about how they plan on growing the MTF book, and that lending business will become bigger than the personal loan business as well in the next few years. Now, with a healthy growth guidance, expansion to new businesses, Grow's ARPU may also see some uptick as the clients in different verticals grow as well. Whether that can help it catch up with peers, only time will tell. For now, the next major growth trigger for the company comes on Friday, when it reports its first earnings post-listing on the 21st of November. That's Grow for you. It has made quite some noise in the first few days of listings, and the shareholders would only hope that the stock continues to hit it out of the park going forward as well.
Okay, all right, absolutely. Growing, and growing. That's what you said, Hormuz. That's thanks very much for that. And on that note, we need to actually wrap up on Halftime Report. Business Lunch will take all of the action and all of the buzzing stocks forward. Stay tuned.